Hey everyone, welcome back. It's Friday, April 24, 2026, and the markets look contradictory at first glance. The S&P 500 is hovering near 7,140, the Nasdaq keeps hitting records, yet oil has spiked hard. Brent crude is over $100 a barrel, WTI near $95, all because of fresh tensions and disruptions in the Strait of Hormuz. Geopolitical risk is back, inflation fears are rising, and the Fed is pushing back rate cuts. Most investors see this as short-term pain. But here's the insight they're missing. This $100 oil shock and Hormuz crisis are secretly turbocharging the AI nuclear renaissance, and that could be one of the most bullish macro forces for the next 3 to 5 years. Let me explain. AI data centers are creating an enormous power crunch. US data centers already use about 4% of all electricity, and forecasts show that number could more than double by 2030. These facilities need reliable, always-on power. Solar and wind are intermittent. Natural gas helps, but with oil spiking and energy security now front-page news, hyperscalers are turning hard to nuclear. Microsoft, Meta, Amazon, and Google are already signing massive deals to restart reactors and secure gigawatts of nuclear power. The Hormuz crisis just poured fuel on this fire. When the world's oil choke point gets threatened, it reminds everyone how fragile fossil fuel dependence really is, especially for critical AI infrastructure that can't go down. This is accelerating the nuclear renaissance. Small modular reactors are moving faster, existing plants are being restarted, and utilities with big nuclear fleets are locking in long-term contracts. The clearest winner right now is Constellation Energy, ticker CEG. They're the biggest nuclear operator in America and just struck major deals with Microsoft and Meta to restart reactors specifically for data centers. Other names like BWX Technologies and GE Vernova also stand to benefit from the component and tech side of this boom. Here's why this is different from past oil shocks. In the 1970s, energy spikes crushed economies with no offsetting productivity boom. Today, the US is a net energy exporter. AI is driving real earnings growth through productivity, and big tech has the balance sheets to lock in power for decades. That's why stocks keep making new highs even as oil runs. Gold pushing toward $4,700 tells us inflation is a real concern, but markets are also pricing in resilience from the AI supercycle. Of course, risks remain. If Hormuz tensions explode, we could see broader slowdowns and higher for longer rates. But even then, the need for secure domestic power only grows stronger. So bottom line, this isn't the end of the bull market, it's the catalyst making the AI nuclear boom even bigger than expected. Investors should consider overweighting the nuclear AI infrastructure theme. CEG is a direct high-conviction play. Add exposure to the big tech names signing these power deals, and keep some gold as a hedge if you're worried about near-term volatility. What do you think? Are you adding nuclear exposure right now? Drop your thoughts in the comments. If this insight was helpful, hit like, subscribe, and I'll see you in the next one. Stay sharp.